Hi, everyone. Welcome to the ABF Journal Podcast. In today's episode, we are going to explore the nuances of the sales process in asset-based lending and how it differs from that of traditional bank financing. Our guest today is going to share his expertise on cultivating strong relationships with referral sources, tailoring financial solutions to meet the unique needs of clients, and the keys to success in a competitive sales environment. He also offers valuable advice for those looking to thrive in the dynamic industry that is ABL. Whether you're in asset-based lending or simply want to learn more about it, this conversation is packed with actionable insights and inspiring stories of business transformation. I'm excited to share this discussion with you today, but before we begin, let's stop and hear a word from today's podcast sponsor.
We understand the importance of connecting our clients with the resources they need to grow. We are hungry to help our clients succeed. Our best days at work are when we are able to guide our clients to successful results. It's a desire that transcends roles and titles. First Business Bank. Experience the advantage.
Hi, everyone. I'm Rita Garwood, Editor-in-Chief of ABF Journal. Joining me on the podcast today is Mike Colloton. Mike is Vice President and Business Development Officer at First Business Bank. I'm excited to talk with you today, Mike. Thanks for being here.
Yes, thank you very much for having me, Rita. I appreciate it.
So today we're going to talk about sales in asset-based lending and everything that's involved in that. You have a lot of experience, in a business development role. But just to get us started, can you provide an overview of the sales process that's involved in asset-based lending and how it's different from other traditional forms of lending?
Yeah, that's a good question. I guess first of all, there probably are two different types of way that selling is done in asset-based lending. The very large, big deals that get done in asset-based lending, maybe companies or lenders that are doing deals from 50 million to 100 million on up to into the billions, their calling efforts are different than what mine would be. I think anyone in the asset-based lending world that's doing deals from as small as maybe $100,000 up to maybe 50 million, that's kind of what I can describe because that's where I've been, and I think it's again a little bit different. So the way that we are doing it, the way that I do it, is calling entirely on referral sources, and that can be traditional bankers, that can be other asset-based lenders that do deals a little bit differently than me, workout lenders, investment bankers, private equity groups, mezzanine lenders, brokers, attorneys, accountants. So really what we call centers of influence. So people that are talking to businesses, helping them with their businesses, helping them with their financing if there's needs for that, calling on them, calling directly on companies, which is what traditional bankers do, which is how we differ. Calling directly on directly on companies would be very difficult because what we have to provide is something that it's unique. They need it now. They probably didn't need it a year or two ago. They probably won't need it 5 years from now. So trying to call those businesses directly, while it can work, it's like picking up a needle in a haystack, basically. So I think some asset-based lenders do a little of that. I think the big bank asset-based lenders, the big deal guys, do that directly because they know who to call on. And obviously traditional lenders, that's what they do. They call on businesses. They also call on COIs, many of them, but they call directly on businesses, try to build rapport, get to know the ownership, get to know the management, and help those businesses if and when they need new financing. So that sales cycle for a traditional banker can be, 6 months to 3, 4, 5 years. Whereas for asset-based lending, they usually need something done pretty quickly. That's why the COI is referring you the deal. So our cycle is usually going to be, we get an opportunity and hopefully within 60 or 90 days, we've got it done because everyone's focused on getting it done by a certain point in time.
Definitely a quicker cycle there and
Yes.
a lot of differences between the traditional sales approach. So you've been, in the business for a long time. How has your career in business development affected your approach to selling asset-based lending solutions?
So my career, I have done a number of different things, like a lot of people in lending. I did work. I'm a accounting degree. I'm a CPA. So started doing work on the audit side, so working from that side of it, did portfolio management. So I was actually managing a portfolio of asset-based clients, and then into the new business side. So I think having had the experience of doing those other things helps me with regards to how to talk to different people within the organizations that I talk to. And then having worked for bank-owned asset-based lending companies and with bankers, I spent a lot of time with them, with our people at our bank. So I kind of understand a little bit better maybe than a non-bank asset-based lender about how they think, what they're looking for, and how we can hopefully help them with what we do. So certainly that has come into play.
So you mentioned that, the customers that you deal with are not, in the market for traditional banking solutions. So when you're evaluating, a potential opportunity, what factors do you consider to ensure that asset-based lending is the right solution for that customer?
So you mentioned they're not in the market for traditional bank financing. They probably are, at least when they start.
Mhm.
If their existing bank has told them that they can no longer help them with what they're looking for, or God forbid, tell them they need to find new financing, probably the first thing they do is talk to other banks. Um, so that's what their first thought is move from bank A to bank B. After they've talked to a few different banks and they've found out that they can't get what they're looking for there, at least as of right now, that's really when we have a better opportunity to get a deal done with them. So that's kind of the first thing that I'm looking for, is that they've actually talked to some other banks. They've kind of explored that side of it, because quite honestly, most traditional bank financing is probably going to be a little less expensive than asset-based lending. There are some advantages certainly to working with asset-based lenders versus the bank, but again, the cost is usually a little more, and it's more time consuming, and there's more reporting. So that's kind of the first piece is, is this a deal that could be done by a bank, and have they explored that? Most of the time they have. So by the time it gets to us, we know that piece of it is taken care of. Um, the other thing we're looking for is plenty of liquidity. You know, we're typically lending on receivables and inventory. We also can, at least where I work, we can lend on equipment and real estate as part of a package, but we're not a cash flow lender. So, the assets are what they are, and we have advance rates which we can certainly adjust based upon the situation, but they're still there. So there's only so much we can lend to a company. So, getting an initial analysis of what they need, what we can provide is very important, because if we can't provide enough for them, we might not be the right fit. So that's obviously a big piece of the first part of the puzzle also.
So you had mentioned that you work with a lot of, referral sources instead of working directly with the borrower. How do you cultivate the relationships with all of those? Can you talk a little bit about your process and how you, might introduce yourself and how you keep that relationship going?
Yeah, of course. And that's the biggest piece of my job, is doing just that, is getting to know those people. So I have a certain territory that I cover. Again, like most business development people in asset-based lending, I cover Wisconsin, Illinois, Indiana, Minnesota. So I travel to the larger cities within that territory. Next week I'll be in Chicago for a couple days, and make a lot of phone calls, set up a lot of appointments, and get to know the people and explain who we are, what we do, and hopefully over time get some deals done with them. So they continue to call on you and talk to you. So it's really just it's a continued, persistent, um, staying in the marketplace, getting deals done, staying in front of people, trying not to be, overly pushy, or be, in their face or bothering them too much, but be there often enough, via either face to face or a phone call. We do some drip marketing. I think a lot of lenders do that. Everybody does that. That's part of the world now. So there's some emails that we send out when we get deals closed, tombstones, those kinds of things. Doing podcasts. So really anything I can do to just kind of stay front and center in their mind when they see something that might be a good fit for us. But I
So
find face-to-face meetings are the best, certainly. I mean, you get to know a person a little better when you can sit down with them and have lunch, or dinner, or coffee, and just talk about who you are and your experiences and your career, and get to know them better.
yeah, it really builds that, one-on-one relationship. And yeah, I agree. There's nothing like that. So let's say those, referral sources bring you a lead. How do you go about evaluating those leads to ensure that it is a good fit for you and your team?
So for us and within our organization, all the business development people, we have a lot of experience on the credit side. So kind of just dig into the numbers. Figure out figure out what they need, figure out how much you can lend them, and then again, a lot of the companies we finance have had some cash flow problems or issues or performance issues, and that's why they're talking to us. So what caused those issues, and then what have they done to correct the situation? What are they doing to correct the situation? We want to be lending to companies that we feel are heading in the right direction. So a lot of the businesses we finance, they've had some cash flow problems, but I need to be able to make the case to our senior management and to myself actually that going forward, things are going to be better, and here's why. So just that whole analysis of their plan and how they're executing that plan is a huge part of what I do, and that can, depending upon the referral source, can make a difference too. If I'm getting a referral from a turnaround consultant that is in there. That's his job, is helping them fix things, and he's got it all figured out or a lot of it, and he's working with them on it. That's probably a better referral than a broker who's just looking at a deal and trying to help them find financing. Both might be very good deals, but the one from the turnaround consultant, I probably can be pretty sure that they've got something in place where they're working it to fix the company.
Good point. So as you mentioned, you see a variety of different types of deals. They're coming from different sources. Can you share how you tailor an asset-based lending solution for a specific client? Maybe give an example of a scenario that illustrates how you do that.
Sure. Yeah. So, every deal is a little bit different, but our traditional deal is probably going to be a manufacturer distributor. They've got business to business receivables. They probably have inventory. So finding a way to get them as much availability as possible, to help them, clean up pay off their existing senior lender because we need to take a first position, and then hopefully help them clean up any past due, payables they have or any book overdraft, and getting them plenty of liquidity up front is kind of the key. And that can entail, again, there's only so much we can do, but oftentimes what we can do is, I guess an example would be about 7 or 8 years ago, we financed a company locally that was with another local bank. They had some issues with that bank due to a management that the ownership had brought in, and they replaced that ownership. They replaced that management. The ownership came back in to run the company, but that bank had lent them too much money on the revolver. They also had a term loan on the real estate, and they didn't have any lending on the equipment. Um, they thought the building was probably worth $2-3 million. I think they were lending them $1.5 million, $2 million, somewhere in that range. The building appraised, I think, in somewhere in the $5 million range. So what we did is we're able to pay off that revolving line of credit, which was based upon receivables and inventory, and there wasn't enough there to pay off that line of credit based upon those assets, and move some of that debt over to the real estate, which freed up a lot of liquidity on the line of credit, so they'd have the liquidity they need to run the business going forward. One of the other problems that company had at the time was the inventory that they thought they didn't have, which had to be written off on the balance sheet. So there really was nothing they could borrow on it at that point in time. But again, with us being able to move that debt around, lending just on the receivables, we were able to get them what they needed. So they had a line of credit with actually no borrowings when we closed, a term loan on the real estate, which was larger than they had in the past, and a term loan on the equipment. And that company has done very well since then.
Great. I love the creative approach of asset-based lending. There's always a different story, and there's always, so many. I love just the story of the business and how they got there and how you made things better. It's always nice to hear those things. So
That
when
is the
you're
fun part.
yeah, when you're first introducing asset-based lending to a borrower who might not have heard it before, what are some, misconceptions, or what kind of hurdles do you have to get over when kind of introducing them to the product?
Um, so yeah, that's interesting. Certainly that was different. I would say when I started in asset-based lending, it was considered more of a almost being on a timeout or in jail if you had to go to asset-based lending, back long time ago, because it was quite a bit more expensive. That isn't the case anymore. But I think there still is some people still think that way, that they don't want to have to move to that if they don't have to. So that's one misconception is, it's going to be way more expensive, and it's going to be all this extra work. Um, Again, depending upon the asset-based lender you're working with, that certainly can be the case, but it's not always the case. Our rates are not much higher than traditional bank financing rates. So that's probably the biggest, hurdle to kind of overcome with getting them to, to consider asset-based lending. The other way to help them with that is explain some of the things we can do that, a traditional bank wouldn't do. Our advance rates on receivables are always higher than a traditional bank. Our advance rates on inventory can be higher, certainly. There's other assets that we might be able to lend on that a bank might not be as comfortable lending on. We typically don't care about leverage. So whereas a bank might be very uncomfortable if the leverage gets too high and not be able to help continue to finance the company, provided the collateral is there and the cash flow going forward works, it's not even something we calculate. So, explaining the things that we're not going to be as concerned about as a traditional bank lender would be. And if a company is coming out of a turnaround situation where they've had some losses, they maybe have had some bad experiences with the bank, because banks there's a certain point where a bank just can't have any more patience. It's not the bank's fault as much as it is, well, it has a lot to do with regulation and just the way balance sheets are put together and income statements. So they might be ready for a lender that's going to be a little more patient, which we always can be more patient because we understand the deal better and understand the collateral better.
So there's a lot of asset-based lenders out there, and in sales, there's always competition from, other people who are doing the same thing that you are. What's your approach to differentiating your company from everyone else out there?
So our our kind of go-to-market strategy is there's a certain number of bank-owned asset-based lending companies, which we are. And our cost of funds is going to be less. A bank-owned asset-based lending cost of funds is going to be less than a non-bank-owned asset-based lender, which is owned by a private equity group or an individual or someone different than a bank. So competing with other bank asset-based lenders, we are able to do smaller deals than they will. So we get a lot of referrals from ABL shops, from banks that do larger than we do. So we're doing deals from $2 million to $24 million in commitments. A lot of the bigger bank ABL shops are doing deals maybe 10 or 20 million on up to 50, 100 million. So if they're getting referrals from their bankers for deals that are in the 8, 5, 10, $15 million range that are too small for them, we can get some referrals there. So certainly that differentiates us from the big bank ABL shops. I think from the non-bank lenders, what differentiates us is that we are going to be a little less expensive, and we can provide some financing that oftentimes they don't want to. For instance, on the real estate or equipment side, a lot of other non-bank asset-based lenders don't want to do any of that or aren't real comfortable with it, or they might have some rules in place where maybe the term debt piece can't be more than the revolver piece. We don't have any of those kind of institutional rules within how we do business. So that can differentiate us as well. Lastly, I would say just our willingness to look at just about anything. We do have certain things we want in an opportunity, but if we can understand the collateral and understand how the company going forward is going to be positive cash flow and there's enough liquidity, we can look at just about any opportunity, versus it has to be business to business receivables, it has to be this type of company. We're pretty much open to doing other things, and we have over the years.
Great having that flexibility. So I want to shift over a little bit just to your experience as a salesperson. You've been, in sales for a long time, and you've got a lot of experience. So I thought maybe you could share some insights from that experience with, our listeners. Over all of your years in sales, what are the biggest lessons that you have learned when it comes to driving success in asset-based lending?
I think probably in any sales, just being persistent and not being not getting negative, not being concerned when you hear no. I was in sales training quite a while ago with a different bank I was working at, and we had a sales trainer came in, and one of the things he talked about was searching for no's. he said, you have to get a certain number of no's before you get to yes. So he said that every time you get a no, that's a win. So I've tried to always think that way is, when we can't do a deal, or when I just, when I can't get through to a company, or when we can't get a deal done, that's just one more that gets me closer to getting that yes. So, I think that's very important. So being persistent, not being afraid to make the calls, um, and not being concerned when you can't help, or when the answer is no, or when they tell you no. Again, that just gets you one step closer to getting a deal done.
Great advice. So over the time that you've been in the industry, there have been economic changes, there's been changes in technology. How have you learned to adapt to all of those fluctuations?
So honestly, I would say we haven't, and I haven't adapted a whole lot. Again, I still like the face-to-face visiting with people, and traveling to other cities and meeting with them in person. I think is very helpful. Um, However, certainly there are things that we do differently, and we've taken advantage of. Certainly, our back room staff and our audit staff uses much more of online capabilities than what we'd used in the past. When I first started, they were faxing in the reports to us. So obviously now that can be done, online, with them just going to a portal and putting everything in that way. We also have a much more robust CRM system. So, the system I have, that I can look at the companies we've talked to, have the notes on the company I've talked to, as well as the COIs. That's all on my phone. Each one of us has an iPad. It's all on the iPad. So you've got that information with you at all times. So taking advantage of that and being able to use it quickly is very helpful, especially if you're on the road quite a bit. And then just our overall underwriting, the systems we're using for that are certainly much better, and can do things much more quickly, and can do much of what we used to have to do by hand, can do that much more easily now with the systems we have. So it just, there's nothing specific, but just taking advantage of things where they're there.
So what about just the keys to success? What would you say you need as a salesperson? What are the top skills or traits a person needs to have to sell asset-based lending?
Again, I think persistence is a big one, certainly. I think you're going to be more successful, I think, if you have a good understanding of the product itself. So I think anyone who's come up through the ranks, kind of as I have, and I think a lot of the salespeople have, but I think that's very helpful. So if you've got an accounting or finance background, if you've done the audit work, so you've been out on the road looking at companies' books and records, you understand how that all fits together. And then if you've been in portfolio management, certainly that's important, because how the deals fit together, and what the portfolio managers have to go through to make sure the deal works. So, having done all that underwriting work and all that initial work, and then also I think, if you've got some experience, as a workout lender, that's not an easy job, but I think it certainly teaches you a lot about why documents are so important, why covenants are important, why collateral is really important. Having that experience is good. So I think as much experience as you can get in the asset-based lending world before you get into sales, certainly that's a big plus for anyone.
So in your opinion, do you think people should not, is asset-based lending sales not an entry-level sort of position? It's something that you need to build upon in order to even get into?
Yeah, I don't think there's anyone that would hire someone without any kind of experience to do this job. I know when we hire BDOs, we're always looking for someone that's got, if we can, someone who's got the background I just described. But if not, at least that has sales background, hopefully maybe has some bank sales background. Um, the people we hire out of college, or young people that are just getting into the industry, are almost always starting in our collateral analyst position. So, helping to manage the numbers up front, or on the audit staff, where they're going on and looking at the books and records of clients and kind of learning the business that way. And I think in the long run, that's going to help them out a lot.
Yeah, last piece I want to just any final words of wisdom from you, if you could share one piece of advice, besides what you already said, what would it be?
um, I guess the only thing I would say is that it's not easy, but it's certainly very you can be it's very satisfying to help businesses with what they're looking for. The companies we can help, a lot of them were on the verge, maybe not quite on the verge of going out of business, but certainly, we're having some problems. So, again, it's very satisfying to help those businesses and see them prosper and do well. I'm always surprised when the companies that we finance up front, the numbers haven't looked great. And I don't manage a portfolio, so but I do kind of keep track of the companies we brought in and how they're doing. And it's always great to see those companies when they're making a lot of money down the road, and maybe 3-4 years later the owner sells the business and just has a huge windfall from almost being maybe out of business a few years before. So I would say that's the best part of the job, is just being able to see that happens.
That's so interesting because, eventually they're kind of graduating out of out of what you're selling, but it's, in the end, everybody wins. So
Yep.
that's a
Yep.
great final word there. Well, thank you so much for talking with me today, Mike. I appreciate you taking the time and talking about the sales process and asset-based lending. It's been a great experience. I've learned a lot. So thank you.
Thank you very much. I appreciate your time.